Hi, I'm Shyam Sekhar and I'm going to talk to you on your journey towards financial freedom. Since 2015, we have been running a mass movement of financial inclusion. Everybody is getting financialized. We have a bank account, you get insured, you start investing in mutual funds, you see opportunities across the spectrum. But just seeing opportunities is not enough. You need to make the most of it. How many of you have seen people who have grown from nothing to 1 crore of financial wealth within a decade? You don't see too many people. But the opportunity is ahead of you. Every one of you can think of reaching the magic milestone of 1 crore. You know something? Only 3% of Indians currently own financial assets more than 1 crore. So, if you get there, you are a part of a select set of Indians who are high achievers and who know how to turn their achievements into financial wealth. I'm going to take you on this journey on 23rd August in a short webinar. Register right away and join us on this journey towards 1 crore, which we think is your first big step towards bigger wealth creation. So be there, join us, and let's talk.
This Saturday at 11 a.m., we have two interesting webinars lined up for you. First one is on the topic Outlook on Thematic Mutual Funds. And the second webinar is on the topic The New Consumption Playbook. What's happening in Bharat and India? The registration links for these webinars are given in the description below. Hope to see you all there.
Growing fast with very little capital. Most people who come into the stock market don't come in with too much capital. Those who come into equity investing come with very little money. Their income is also modest when they come in with the ambition to become an equity investor. This is true of me, this is true of every one of you. Some have salaries from which they can save a high amount and they can invest it in shares. They are the lucky ones. But if you're like me, then you would not have had even money to start with. That was my story. So there's not much salary also. So how do you actually build a portfolio that is significant with very little capital? Most people take to trading because they see trading as a means to earning money quickly. But trading can also be a ticket to losing money double quick. If you can earn money quickly, you can lose money at twice that speed. That's the problem with trading. And if you're going to take leverage, then it happens very fast. Today, we see that in a year, Indian traders lose up to 1.5 trillion rupees, that is 1,50,000 crores, trading in the futures and options segment. We don't have data on how much money people lose in the cash segment. So trading is not really working out as an effective means to make a lot of people rich. Maybe a few of you are very lucky or very smart or both. But the average guy who's coming to the market and who wants to make his money grow faster is not ending up being lucky with trading. Trading almost always destroys him. First, we should accept this truth. Once you have accepted this truth and made peace with yourself, you're not going to the F&O segment to make a fast buck. Which means one avenue to lose your capital permanently is closed. That's very, very important because only if you close this door, you have a chance of making your money grow faster. And the only place where your money can grow faster is probably in the cash segment or through mutual funds. I know a lot of you don't believe that mutual funds can give faster returns. But my experience in mutual funds, especially in thematic mutual funds over the last 16 years, clearly tells me that it is possible to grow your money faster if you are having the capability to make that small sum of money work for you by investing it in themes which are out of favor, where you see the theme coming back in favor over a period of 2-3 years. That's very important. Your theme has to come back in favor in 2-3 years. If it doesn't come in 2-3 years, then your money will not grow fast. It's important to pick such themes that come back in favor, and I have done this professionally over the last 16 years in mutual funds as well. So it's not as if you cannot grow your money fast in mutual funds. You have to buy a theme which is out of favor, which you clearly see coming back in favor over the next 2 years or 3 years. Now that is contrarian investing done at the right place at the right time. Yes, it's a big ask, but you need to do it. And if you do it even in, let's say, 20 or 40% of your portfolio in 1 or 2 themes, chances are your overall rate of return will go up significantly, while 60% of your portfolio will be safe zone and earning decent returns. This 40% will become the accelerator in your portfolio, which will give you higher returns. Now, this is a playbook that I am very familiar with, I am very comfortable with when it comes to telling others how to make their money grow faster if they wish. But even to do this, your risk appetite and your risk profile should permit you to do it. If you're completely risk averse, you can't do it. You should just stay away from trying to make your money grow too fast. If you're a high risk taker and your risk capacity is high and your risk profile gives you a very good risk score, then maybe you can try it to a part of your portfolio so that that part of your portfolio performs significantly better and accelerates your overall portfolio. You can't do it in your whole portfolio as a lot of people are doing it. I know a lot of people. Today they have only small cap, mid cap, thematic. That's their portfolio. In my assessment, that is not a sensible way to invest. And I could have said this sentence in a very harsh way, but I'm saying it in a very soft way so that it reaches you and penetrates your mind and somewhere registers in your subconscious so that it wakes you up when you're doing it the next time. So your risk taking must be very calculated and precise. You can't take blind risk taking by buying all high risk funds in your portfolio. Okay, what happens if you do this, buying all high risk funds in your portfolio? I know a lot of DIY investors who do this. Portfolio full of only small cap funds and mid cap funds and thematic funds. Nothing else. What would happen in this case is, if you have bought the theme when it has already played out significantly, when it has taken almost all the juice out or most of the juice out and very little juice is left, and you are entering it a little late thinking that it will give you more juice, then it is your capital that gets the squeeze. You are going to lose capital. And when you make this timing call wrong in a thematic, you are going to lose not only capital, you are going to wait for a very long time even to earn back what you put as capital. Now that's a double disaster. Losing money and then waiting long time to earn it back. Most investors in thematic funds in India have only this experience. Yet in every market cycle, people who want to grow their money fast come back and commit the same mistakes again. Or new people come into the market and commit the same old mistakes. This is strictly avoidable because it is not going to deliver what you want and it's going to give you pain, enormous pain. Now, as an investor or as an advisor or as a manager, I'd like to keep the pain low for my investor or for my client. Because only if you keep the pain bearable and within control, he is going to stay the course till he achieves what he wants. Otherwise, he's going to say, oh, sell everything, give me back the money. It's going to become unbearable. So, you should keep the risk appetite in mind and take only risks for your investors which are bearable for the investor. It can't be what I can bear, it should be what the investor can bear. Now to direct equity investing. Here, if you want to make your money grow fast, the most important thing is not to make choices that can lose money for you. That's the irony. You want to make money quickly, but your choices should never lose money. That's the first thing that you need to satisfy yourself. Only if your choices don't lose money, and all your choices must not lose money, only then can you make money from some better choices and accelerate your returns. The mistake people do when they go to direct equity is that they make choices which can lose a lot of money, and they make choices that can make a lot of money. The number of choices that can lose money almost always outnumbers the number of choices which can make money. Overall, the portfolio doesn't deliver the desired result. So this is a problem which the equity investor has to fix. So be loss averse even if you want high returns. Take very, very calculated risks only where you are sure that you will not lose money. And raise your risk taking only after you are doubly, triply sure that the investment will never lose money and has a more than average chance of succeeding. And put in more money as you see success. Don't put in money in anticipation. Don't put all your money in anticipation. Put in more money as you see more success. Validate the success and keep increasing exposure so that you are on a gradient that is an ascendant, a winning gradient. Don't put money on the losing gradient because there is no guarantee that you will not lose all the money or more money on the way down. If you know these things and practice these things, whether it's mutual fund or whether it's stocks, you are going to create an investment path for yourself where you give yourself a fair opportunity to grow your capital quicker and make money faster. There's a lot of behavior that has to go into this. You have to curate and cultivate that behavior inside yourself, and it has to reflect in your investment actions and decisions. And you have to constantly fine-tune your behavior to keep it in check and align to your investment aspiration, which is to make money quickly. So you need to think a lot, act decisively, act slowly most of the time, act fast only when your conviction is absolute and certain, and know when you need to slow down and sell. If you manage your behavior well at all times and keep on improving your behavior, your money is sure to grow faster. That's the irony, but that's the truth. If you reconcile with the truth, I'm sure your results are going to be better than what you expect and what the market is achieving. Now, that's a good place to be. I wish you get there quickly. Happy investing.